Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 15th of September. Starting off with Afentra, which used to have a different name. I can't actually remember what it was, so answers on a postcard if anybody can remember. Here we've got a situation where the shares have broken that line of resistance there from May around, I suppose we call it that 15 pence. End of day, end of week close above 15 pence could be enough to get the shares on the road to a August price channel top, August 2020 price channel top as high as 23 pence. Maybe by the end of next month. We're obviously hoping for the kind of move higher for the shares that we saw back in February. Stop loss back below 14 pence, so reasonable risk reward on that situation. Stock which is looking interesting on the fundamental front, maybe a better part of the recent deal that was involving, well, didn't involve Vela, but that'll be coming up. But in terms of St. George, here we've got the second break of this line of resistance from July. That's around the 5.25 pence level, also level with the 50-day moving average. And the longer we stay above that, the greater the chance of a move for the shares, at least up to the 200-day moving average. And that May resistance line there at 8 pence, perhaps by the end of next month or even sooner. Good funding news for Dukemount Capital today, and we've seen the shares once again head to that main resistance, or the near-term resistance that they've got at 0.4 pence. Gap higher today as well, so it'll be interesting to see whether that gap remains unfilled. If it does, then we should eventually break 0.4 with the target after that up to 0.5, which has been basically the state of play since the shares bottomed out below 0.3 pence. But the key here is that the shares hold above that gap floor around, what's that, 0.32, 0.33, and the 50-day moving average. The next stock is Itaconix, which was a former bull situation from the turn of the year, as indeed many stocks were. So shares went up from 2p to 17 in May. Current situation looking interesting in the sense that we've got the 200-day line rising and meeting with the 50-day line. The other point to note is that shares likely to close above the top of the gap there. That's around the 10.25 pence level. So 10.25 pence plus close this week should be enough then to take the shares back up towards the best levels of the year at 17 pence plus, and that could be seen by the end of next month. Only back below 8 pence and the 50-day line, really delaying the recovery argument for Itaconix. Onto a stock which is the punter's favourite and continues to be in a sort of maniacal way. We've got Kodal, and again, for some reason, the shares getting blocked near that 0.4 pence level. We've had 3 or 4 moves to that area. So I suppose if you are not in the shares, but you think that it'll go higher, you want to see a weekly close above 0.4 pence to take us to our pointed target as soon as the end of next month, up to 0.6 at the top of that rising trend channel from last September. Stop loss back below 0.3 at the moment, rather obviously. On to KR1, which I've described as the king of Aquis. Not many competitors there, I suppose, on that particular market, but KR1 is the sort of the blue chip there by a long way. Here we've had a break of that resistance line there from back in February, holding above the 50-day moving average on a consistent basis and gapping higher today, above 150, looking for as high as 320 perhaps by the end of the year for the shares. Obviously, there's a £2 resistance there from May in the interim. Moving along to a stock which has been defying the bulls for quite some time, keeps giving the impression it's making a base and then heads lower, but we've got another chance here of redemption / salvation with the gap higher for the stock off that line of support there from August last year for Oracle Power. Decent bullish divergence here with the lower prices actually contrasting with the higher RSI support points. So bullish divergence could still take the shares back up towards the low 40s over the near term if this is indeed a near-term floor for the shares. On to a stock which is in a rather more healthy technical state at the moment, which is Pipehawk. Here you can see that the shares gapped through that resistance from June around the 8 pence level and never really looked back since. The current situation is that we are enjoying a golden cross this week between the 50 and 200-day moving averages, and that should be enough to propel the shares up towards 16 pence by the end of next month on the basis that there'll be no break back below 10 pence in the interim. So above 10, looking for 16 on Pipehawk at the moment. On to a stock where there's been a bear trap, and it comes from Pharos Energy. Here we can see that the shares had a bear trap below the old 20.6 pence support from back at the end of March. End of day close or a weekly close back above that could take the shares up to 24 pence, which is or was resistance on the way down from back in July. And the stop loss really back below 18 at this particular juncture. Looking good also because of the bullish divergence with the lower prices but the higher RSI support there in the oscillator window. Stock of the day, dish of the day, and something that I think people will be waiting on for quite some time is Sabien Technology. Here we already had the break of that line of resistance, which I draw properly there, earlier on in the month, then sort of dribbled back after that, but there was bullish divergence ahead of this move today, so for people who are fans of the stock, there was a chance of getting in before the move. The other thing to note is actually the way that there were bear traps below that old January support there, around 19.5 pence. Current situation is that at an end of day close above the 200-day moving average, which we hopefully will get at 32 pence, could still take the shares up to as high as 46 or 47 pence, which is the top of that broadening triangle from the beginning of the year. This stage only really well back below 28, 29 pence, and post-April resistance really delaying or questioning the buy argument for the shares. Moving along to a stock which I haven't looked at for quite some time, Savannah Resources. Here you can see there's been a clear break of that trend line there from back in June. That's versus around 3.6 pence, and above that we're looking for the shares to fill the gap up to 5 pence perhaps by the end of next month. Bull argument in force certainly while we're above 3.5 pence. On to Vela, which I mentioned a little bit earlier in the sequence. Here we've got a situation where we broke that line of resistance, which was the buy signal at around 007.5, and obviously the shares effectively doubled from that point if you were smart and clever. But the pullback since then has been rather painful. The good thing about the pullback, though, is that so far we haven't actually gone back below that 007.5, and we have also remained above the 50 and 200-day moving averages. So I suppose the message here is that while we're above 0.08 pence, we still have a chance of hitting up to 0.18 over the course of the next couple of months. That's it for me today. More updates tomorrow.